Welcome back. It's been a banner quarter for junk debt, not a single default for CCC rated issuers in the last 3 months. And that's the best stretch since 2007, which, if you remember, was a year before the global financial crisis. And with the Fed set to raise interest rates next year, what does this bode for zombie companies that are ultra sensitive to higher yields? And Brian Cheung is joining us today. And Brian, I know you're writing about this at yahoofinance.com. Encourage everybody out there to go and read it. What are the details? And should we be concerned about rising interest rates with respect to these companies?
Yeah, Jared. Well, the flood of liquidity from the Federal Reserve, in addition to just overall business conditions with the rebound in economic activity, has really turned a lot of those zombie companies into companies that look like they were never eaten alive to begin with. And when you take a look at this data from Bank of America, you can see that really the amount of defaults among CCC rated companies, again, this is the junkiest of the junk debt, appears to be at lows that we haven't seen in quite a while. As you mentioned, just over the last 3 months, there hasn't been a single default for a CCC rated issuer. And the last time that happened was the March to May period of 2007. Again, that doesn't mean that there haven't been defaults. It just means that the last default that we saw was several months ago. We do recall that there was quite a peak in the amount of defaults at the end of 2020. It didn't happen in the middle of 2020. It really happened on the time lag basis towards the end of that year when the liquidity ultimately ended up drying up, despite the fact that the economy was about to reopen with some optimism over the vaccine coming out. But it just seemed like some of those companies that maybe were able to access easy financing at the onset of the pandemic ultimately floundered under the cratering demand. When you think about a lot of these high contact retail and restaurant companies, consider the likes of Friendly's, in addition to other types of companies, Guitar Center, for example, that filed for bankruptcy. Again, that doesn't mean that they can't emerge out of that, and it doesn't mean that CCC rated issuers ultimately had nowhere to go. But it just shows that at least in 2021, those companies that were able to survive the later parts of 2020 seem to be having a pretty easy time accessing credit right now. As you mentioned, comparisons to 2007, not always the most welcome, but at least for right now, these companies can feel pretty confident with the Fed continuing to keep its support with them pedal to the metal that they can still get easy financing out there, Jared.
Hey, Hertz just emerged from bankruptcy, set to close at a record high. I think enough said. Maybe calm, but calm before the storm. I want to switch directions, talk about Powell and that renomination that is up for the end of January. What's the latest there? He's still the shoo-in, I think, favoring the odds, but he's had some competition here. And as news continues to evolve about Fed Vice Chair Richard Claridge's trades, that's in the balance as well. What's the latest?
Yeah, well, when you take a look at predicted, again, this is a bit of an informal market, but broadly speaking, it seems like things still favor Jerome Powell. So 74 cents compared to Lael Brainerd at 16 cents. So it seems like Jerome Powell is still far and away the lead candidate in the race for Fed chair. Again, we haven't heard anything from the Biden administration in terms of where they're thinking on this, but their time is kind of running out, because you consider that Fed Chairman Jay Powell's term as the Fed chairman expires in February of next year. Obviously, the Senate very slow to move through not just nominations, but really anything right now. So it seems like they need to move relatively quickly on picking somebody. But at least for right now, we know the trading scandal, which likely put a dent into Fed Chairman Jerome Powell's odds at nomination. Some had seen him as a shoo-in before that, don't appear to be necessarily tilting against him. Consider that the trading scandals that have really enwrapped the likes of former Boston Fed and Dallas Fed presidents Eric Rosengren and Robert Kaplan really kind of put a spotlight on the Federal Reserve's lack of stringency with regards to its ethics code. Now, of course, those types of things might likely be just as culpable to the Fed chairman as they are, though, to the alternative candidate for a Fed chair, someone progressives really favor, which would be the likes of Lael Brainerd. And that one reason why is because she actually chairs the committee within the Federal Reserve Board responsible for renominating and reaffirming the appointments of these regional bank presidents like Rosengren and Kaplan, both of which stepped down over the past 2 weeks. Now, of course, the culpability at the board level down in Washington, D.C. is also kind of accentuated by the trades that were done by Fed Vice Chairman Richard Clarida. He's the number 2 official within the entire central bank system. He rotated millions of dollars out of a bond fund and into a stock fund right before the Federal Reserve started taking emergency actions in the depths of the pandemic last year. But again, seems like for right now, Fed watchers saying on balance that Powell is still odds on for renomination, Jared.
And you have to think the last thing the market wants to see is uncertainty regarding this Fed chair, especially as the Fed begins to taper. And as also we have just kicked the can with regard to the debt ceiling. Brian, Cheung, thank you as always for that report.